Hey Matthew, how you doing?
Not bad. How about yourself, Felix?
Pretty good, pretty good. Tough day today in the market. Thursday, February 12th, and Nas everything turned around today.
Yeah. It's been interesting, right? Like I've been talking to other people on other podcasts and stuff this past week and saying, this it's not the spot to be a hero, but yes, you can take some shots in the market, but just manage your risk here appropriately,
Speaking
especially
about
if
being a
you,
hero, the IGV, the software
yeah,
index ETF, is down significantly. And I read an article today that retail has jumped in a big way at the lows here. So the IGV is down probably about 30%. Had a pop last Friday. Goldman came out saying it was the bottom or near-term bottom, and it had a three-day rally. Thursday, I did see right before that call on Friday. Thursday, I saw a big call spread go up in IGV. Caught my eye, but I didn't think about it. And then I saw it the next day. Oh, okay, I see what they're doing. Um, you know, it's down so much. Some of the names are down 60, 70, 80% from the highs. Adobe getting killed. ServiceNow killed. Microsoft getting chewed up there. Palantir down, I think Palantir's down 35% in like 6 weeks or something like that.
yeah,
Um,
it's down pretty big.
yeah, big. Maybe cut in half after today from what was the high? Do you have the high there in front of you?
High was 207.52 back in November.
That was the high? Go back.
Yep.
You went back 2 years?
Yeah, for Palantir you're talking about?
Yeah,
Yeah.
207. Okay, so 207
207.52.
the high the stock is trading 130 now. So what's that, 70, 35%?
Yeah.
35%.
It's
These are big, massive moves for big stocks.
yeah.
And I wanted to see, how do we get long in a smart way? The basic question I'm always asking, how do we get long in a smart way or short? In this case, we want to sort of buy the dip, but we want to be a little bit careful. And I suggest that we probably take a little bit. I don't know if this is going to be a V-shaped rally where it's just going to just shoot back up. Probably need a little bit of time. And given that those parameters where we want to get long, a little bit of time, we don't know where the bottom is. But there's a technical level seemingly over the last 2 years that we might want to take a look at as a pivot level. If it breaks that, then maybe we don't stick around.
No, yeah. I mean, there's a good way to kind of try to get long, right? Like it's tough really buying a falling knife. But people want to do it, right? Like
Yeah,
where is the big money made? It is made in big drawdowns, right? Like it's tough to do. Not everybody should do it, but hey, we can't tell you what to do, and a lot of people do want to try buying it because, I mean, software names, like you said, have been cut in half or more. A lot of them. I mean, ServiceNow is cutting what, 60%. Microsoft, even though it has AI exposure, has been hit pretty big. So we're seeing this, and same with ServiceNow. They just announced AI exposure, so they had a little bit of an update today, 2.69%, but that's not a big rally. And they were trading 239 back in, um,
right,
you know, just in looks the beginning of 2025. So these are giants that still produce bunch of revenue, right? They're still very cash flow positive. They are still growing in sales, so they're just getting hit because everybody thinks AI is going to consume them. And I think there's a little bit of a theory here that they're all going to get destroyed by AI, but it's hard to think that none of these companies are going to adopt to AI, right? Like,
right.
so
I,
no, it's
or I heard someone say if these smaller companies actually start entering into the space in any big way, that the bigger software companies just buy them,
well, yeah. I mean, think about
and
it.
they
You can
never
just
get
come
to
in
the
right
point
away.
where it's just disruptive.
Exactly. I mean, most of them, they can come in and just say, here, I'll give you 100% premium.
Right.
Like, what are you going to tell your investors? You're not going to take a 100% premium buyout. I mean,
Yeah.
if
And,
if
and then
you've,
they'll just toss the business plan out the window. It's like, yeah, thanks a
yeah,
lot. We'll
yeah.
get
I
to the next.
mean,
I'll go buy the next one. So I'm not
so,
sure how it plays out, but I just thought.
yeah.
I mean, I saw Microsoft getting hit hard, and then the software names they've been getting hit hard for a long time now, months. But now it's starting to it's hitting like the Microsofts, the Palantirs. CRM has been a disaster. Adobe has been a disaster. So yeah, so how do we do that? How do we take automation and make it something to work for us here?
Yeah, let's look at it a couple ways. So let's look at just IGV leaps. All right, perfect. Everything is here. All right, so I already kind of developed this already once. You
Okay.
can see here we have the SAS IGV leaps. So this is just something very, very simple. So if
Okay.
you want, we can just like look at the workflow here and then we'll just kind of go through this and then maybe we'll create another one as well, just for fun, right? So that we can
Okay.
kind of go through this and see how it is. All right, so this one we're going to do something a little bit different. A lot of the times we give signals, because that's literally what Option Circle does. But this one, this is a staggered, so it's another way to deploy, I would say, an agent. You're like, hey, like I want to dip buy this, but maybe I don't want to wait for signals. Maybe I just want to try to leg into this. So what you can do is you can kind of set this up here on the time frame. So you'll see I started it the other day for 211. And we're just gonna start buying every Thursday, and I just kind of set this all up for 9:30 a.m. to 4 p.m. You're just gonna repeat it, and then it's gonna do it every Thursday, and then it'll have an end date, right? So I did it so it's 4 weeks out, so that on the 6th, I just picked a day in the following week and just said that it's gonna stop buying.
Okay.
So that's pretty simple enough. And let's actually edit this so that we can kind of just see it a little bit easier. So you can see here you have all the decisions that you can make. So you can
Okay.
also do it on monthly basis, yearly basis, daily basis. So it's a nice way to leg into something that you're thinking about longer term if you're not looking at technicals or anything like that, and you're
Sure.
just trying to gain exposure. You could do it with stock too. Like you want to buy 1,000 shares or something, but you want to do it over time.
Right.
You can use this to dollar cost average into a long-term position, and it's going to run it for you. You don't ever
Nice.
have to look. It's going to get there within the time period that you set. You can buy a little bit every day, every week, once a month, whatever you want to do.
Can you
So,
show that first chart again, the start time?
yeah,
So what does it mean when you have start time 9:30 to 4 o'clock? Why do you need the start time? What is it? But what is that
it,
essentially doing?
that's just default. So what I'm just saying is you can buy on the open, but you can set it for a different time if you want to. That's what's kind of nice about this.
Okay, so 9:30,
Yep.
basically you're buying when the market opens because it's 9:30 and it's gonna come in and do okay.
Yep. So you can set it for a different time. We just set this up as default when we release it. I might kind of add a little bit in there. I'm not going to maybe buy at 9:30 since it
Yeah,
is
yeah, I was
leaps.
gonna say 9:30 is probably not the best. Okay, so
No.
just put it just to make me happy, 9:45 for right now. Just 9:45. You could change it for whatever you want, so just so I can
Yeah.
understand. Okay, 9:45 a.m. It's gonna buy some calls on the
Yep.
at that time on Thursday. Okay,
Correct. So then come down here, very simple. Put in the symbol that you want. This one we're just did symbol selection instead of doing like pre-market gainers or any kind of customized watch list or focus list that you have developed. This one, you just want the simple symbol list, and we're actually going to use
okay,
this for the next one too. And then just type in your search, what you want, and I already got it in here, but you can see right there. You just click on
gotcha.
IGV.
Okay,
Simple enough. Hit save. And then you have that. And then all it is literally open a call. So open a position, and what we wanted to do with this is we wanted to make sure it's a leap. So I did 365 days. This is going to go out to the March
okay,
2027 expiration. We're just going to buy, one position size, and it's going to do it 4 times, and it's going to be the 35 delta. So we just want to be able to get exposure. I think we looked, it was trading at, let's see, let's just pull it up quick for everyone. That way they know. IGV, sorry, I'm on now. Got to switch. But if we pull up IGV here, it looks like the March 2027s are for the 35 delta, scrolling through. So for the 35 delta, right now you'd be buying the 36 delta. Yeah, the bid ask here, it's on close. We're doing this aftermarket hours. Looks pretty wide. So you're probably going to be paying about 550 for these.
okay.
Because they really, with these sector ETFs, they have a tendency to put them
What strike?
$3, $4. So the strike right now would be the 101 strike.
101 calls. And where's the stock?
The stock, so IGV is at $81, but you have
Okay.
over a year of time, right? You have a year
Okay.
and a month,
Okay.
little year a month and or a year and about 5 weeks. So when you think about it, if it's not the end, we could get a, obviously a nice rally in this. You might not even need to hit at the money. Um, I guess maybe at the money is probably where you might get to a point. If we got a big rally in software, you actually might hit targets buy at the money or a little bit in the money, right? Like, depending on how much time you have left.
Where's the
I
80
guess
call right now? Where's the 80? Where's the 81? Where's the 80 call right now?
the 80 call is, these are dollars, so gotta always scroll. Yeah, it's 63 delta, and that one's trading for,
12,
I'd say the mid's about 14 something there. So,
14? Okay.
yep.
Okay. All right. I
So,
see it.
so we're just trying to look at it as this is a cheap way to try and you define your risk, right? Like, I mean, we're gonna buy that. It's $2,000. Yeah, that is your total risk on this trade. If we don't rally out of it, you're not gonna lose more than that. So you're not putting, 400 shares on and watching this thing slide lower on you or anything like that, or
Right.
having some kind of catastrophe, right? So
Right.
it's a cheap way to do it.
Okay. All right. So we got the marches. We're going to do one at a time for
Yep,
4 weeks.
correct. And
Okay.
then simple enough, you just set up a one cancels out the other type of, action here. We have it set right now for 100%. We may adjust this,
Okay.
but 100%, you don't have to quite get back to the highs if it's running close to the end of the time, on your expiration. So, that way you can still go out, get a 100% trade on this, and then we're gonna just set it for a price change of minus 40% to get out of this because we don't want to lose
Where do you do
everything.
that there? So it's the profit. I say, okay, profit percentage change greater than 100% gets you out. And then the loss is percentage change greater than 40% loss. Is that right?
Yep. Yep.
Okay, greater than equal to 40% loss.
Yeah,
So it
because
already calculates the negative. Saying greater than 40% loss. Okay, and then bid
exactly.
price. Okay, net credit, middle of, and both. So what is that? The net credit. Okay, we understand that. Middle of bid and mid. Okay, so you can actually go between the bid and the mid. I got you. So
Yeah,
not
yeah. So
exactly mid, but a little bit closer to the bid. All right.
exactly. So we're not, I mean, especially with wider spreads,
Right.
this is great little feature here. We did it on the entry too. We did between the bid and the ask
Okay.
because I mean, hey, market makers are going to let you pay the ask if you put it out there.
Exactly. They'll give
You
you
know,
a two cents better, 2 cents better
yeah.
on a $4
It's
wide option.
it's definitely not a fair price most of the time unless liquidity is super tight, like in an Apple or
Yeah, yeah.
the S&P 500 or Qs. But when you're doing something that has wider bid-ask spreads, my recommendation is always to do this because then at least you're working the bid and the system will put it out there, continuously. Um, before it stops and then tries the next day. So,
Nice.
that's something, I mean, I've seen it literally go through, 100 tries before on my side where it's trying to get you into the trade. So, it's out there. It's supposed to do that for you. So you're not sitting there trying to work the order.
Gotcha.
Basically, it's doing it for you.
Okay. And then on the last part, force close with market order, are you leaving that in there or
Yeah, I mean, we could do some time duration if you want.
although it's probably got to be a stop or a gain well before.
Most likely. That
Okay.
and that's my assumption with this. And so to me, it wasn't that important.
Okay.
For some reason, if you're still in this and and you haven't been stopped out or you haven't hit your gain,
That would be amazing by itself.
might as well just yeah. I mean, if it goes all the way to expiration, I would probably say you have a really low chance of that happening. But
Okay.
hey, might as well see it then, right? Um, so we just saved it. We do have a little bit of a new interface here, so people have to go through this. It's a little bit different, but a lot of the same stuff, trading risk strategy. I call it aggressive. I don't know. It's not that aggressive, but it is, it's a high value trade. It's,
Sure.
so it's a position trade. Um, so we're just kind of labeling it right. We're only doing a $3,500 budget on this, right? And
Okay.
we're opening this thing up 100% max on this, 100% on that. on maximum risk per trade available to trade because we're just literally taking this as a slice of the portfolio, right? Like we don't want that budget above 3,500. We don't want
Okay.
to be paying more than that. So um, if
When
you
it
deploy
says
this,
maximum risk per trade, is that
yep.
literally per lot? So you got to do four lots. So minimum risk per maximum risk is four times. Is that
Yeah,
right?
so if you didn't want to just open it up, I just open it up because I want to go, right? Like, no matter what, I don't want to like mess around. But if you're like, okay, I don't want to pay more than $7 per trade,
Okay.
you can do this,
Oh, in
in
US
either
dollars.
dollars or in percentages. So you could be like, okay, so no matter what, if for some reason these deltas get, you know, we get more of an IV spike here, and I don't want to pay more than $750 or something per contract here. You can set that up. I mean, it's not a hard thing to do.
Okay. Are
So
you
there you
putting
go.
total premium? Yeah, total premium versus. Okay, so
Yeah.
$750, right? Okay.
Yep. So roughly what? 21.42%, right? So like
Yeah.
or 0.3%. So it even calculates that for you. So I can set that parameter and say I don't want to pay more than 750,
Okay.
per contract.
Gotcha.
And then you just let it run. So then we want to, the one big thing is we want to take off the dynamic trade sizing because we're just saying one contract here. So this
Okay.
would allocate it based on your portfolio. So if you messed up and left a budget of 20,000, you may get a higher allocation than you're expecting to this.
Gotcha.
Um, so my suggestion here would be like, hey, I put position size of one. Let's do dynamic, turn off the dynamic sizing.
Turn it
That way you
off.
get one.
Okay.
Yep.
Just do it the way we do it. Okay.
Now, this we usually restrict duplicate trades in a lot of the strategies we do. We're actually going to turn that off too because we want duplicate trades. We want this to go through,
Okay.
and then we're going to have a max four trades simultaneous. So that this is just another fail safe. So you won't do anything more than four. Once it has four, uh, calls in there,
Okay.
this
How
turns it
does it
off as
know to
well as
do
blocks
to
it.
do one at a time as opposed to four on the first day?
Yeah, so that's where we set it up in the time selection over here
Okay.
and the calls. So
Okay.
we'll just hit save here. There is some new categories and stuff for everybody to kind of go through. You could we're gonna have these custom tags out there where you can just like type in SAS or type in easy setup or leap or calls, and you're gonna be able to kind of pull up different agents or strategies that are out there that you can use.
Okay.
Um, let's just save this though.
Sure.
Or actually, we don't even have to save it, right? Like we can just close this out so we can go back so we don't lose this.
I think
So
I
when we go,
remember. I think I remember seeing it now. It's the calendar right there. Yeah, weekly
yep, the
Thursday.
calendar
Gotcha.
is what controls it. So, and then we're only going to buy one when we edit here. So position size one. So it's only going to buy one call once a week. So that way it doesn't change for people.
Okay. One call each week. Gotcha. Max trade account, but it allows repeat. So
Yep.
there's a stop there. But that's the way to do it.
Exactly.
Okay.
So that way it can run and we'll have this trading and we'll put this up in the public for everybody to use too, so that you can do this with anything you want then in the future.
Gotcha. All right, perfect. And then that's the IGV. Now, I was thinking, within the IGV, Goldman has another they came out with some new factor. I saw today where it's they're separating the software companies, the ones
Yeah.
that are going to win or that shouldn't be disrupted, and the ones that are more likely to be disrupted. And I don't know which ones they've picked and how they've separated the two, but I'm looking at IGV and right off the bat I see Microsoft and Palantir. They're probably more the disruptors than they are the ones that are going to be disrupted. And so I'm trying to, I guess what I'm asking is how do we get long the IGV using a custom stock list where we can just recreate the IGV with the stocks, just the stock symbols. And then how do we get long the ones when they're starting to turn? Whether it's a technical indicator or something. It's like I don't really necessarily want to get long every single one.
Yeah.
I just kind of want to get long the ones that are starting to turn faster than the group.
Okay. Yeah. Let's just kind of pull up some names here so that we can kind of go through this and we'll just build one quick here for everybody.
Sure.
And we might not like nail down something, but we'll show them how they could do this quickly.
Yeah, the process.
Exactly. So let's just here, I'm going to pull up some holdings. That way we can just have them in front of us. All right, so main constituents of IGV, Microsoft, Palantir, Oracle, Salesforce, Palo Alto Networks, AppLovin. So we can kind of start going through some of this.
Okay.
I think some of these are on some hedge fund name lists of like, top ones to even have the focus on AI, right? Like, so like, we can kind of be selective here and kind of look through some of this. All right, so start time, again, like we talked about this a lot of times, especially if you're buying options, not always the best time to be buying right at 9:30. So let's just do 9:45 for this one as well. You can do whatever you want, but I think we suggest that always at least like kind of like 9:35, give it 5 minutes, let that bid ask kind of come in a little bit
Okay.
from the open. And then you can do it daily. So if you want like a signal, we can do that. We just won't run an end date on this. And then you would just want to kind of do this on your own.
Okay.
Stop it
You want
if
repeat. You want it to keep looking at
yep,
it. Okay. Throughout the day.
correct.
Is it
Don't
doing
repeat
it
would
by
be
a
like
minute
a
or no, 5 minutes? How long? When you say repeat, how often is it doing that?
yeah, so repeat if we don't put in like a a node to say, hey, do this every 5 minutes or 10 minutes or hour, right? You add that loop in. If not, it does it just on a daily basis. So,
Okay.
if you're in like the camp of closing prices or what matter, well, that's what you would do. You would just let this run on a daily basis. The next day, it would trade into that position for you. You'd be like,
Gotcha.
okay, perfect, right? Like it's signaled. Next day, I'm just going to get in it on the open, basically, or
Okay.
in the morning. So always keep repeat. If you ever want, you can just hit the no repeat, and then it would just be a single agent, right? It would do an action one time for you, and then it would just never repeat again.
Okay.
So that's other ways to deploy these. So there's multiple ways that you can use these. So we would just leave this open, or maybe say, hey, we think maybe the end. I mean, you want to give it some
Say March
time.
30th for right now. Just say
Yeah,
March 30th.
we can actually say, yeah, we're not going to do this after March 30th. Either something has, it's run and we don't want to get into it anymore, or
Right.
this trade is totally falling apart. We don't want to be buying this randomly, right? So, uh, and all right, so we're gonna use the same thing here, and we're just gonna do a simple list.
Just take the top 10 just to keep it simple for now.
Okay.
We have Microsoft, Palantir, CRM. Was it Palo
Palantir.
Alto? Palantir, Palo Alto, is that right?
Yeah, Oracle, which I
Oracle.
mean, I mean, you could say you don't like the debt on Oracle, you could take it out. You don't have to have this on here, right?
Right.
Especially when you have I can't remember if it was Goldman or somebody, but whoever's I think it's Goldman, they're financing the debt, actively looking for sellers, for this, we're just putting it in there, but maybe you're like, okay, I don't want to mess with that, right? Like they're literally issuing new debt and they're trying to find active buyers of the debt. That usually means the bank doesn't want the risk exposure.
Who's this?
So, Oracle.
Oracle.
Yeah. So they're actively out there trying to find buyers to the debt. Usually, I mean that's just a clear sign of they don't want that exposure on their
Yeah,
books.
exactly.
Maybe you went a little too big there, Oracle. Is kind of how they're looking at this. All right, so we got what is it? One, two, three. Yeah, there we go. Top 10 right there. And if you wanted to switch this out, you could always, like I said, take something else and say, well, maybe I like Datadog better, or
Okay. All
take
right, we can
two,
stick with these. All right, so
yeah.
how do we do this? Save, right? We got
Yep.
the sim title.
Yeah, so you can title it. You don't have to title it. If it's your agent, you just know it's symbols.
Yeah, top
But
10
if
software, IGV.
yeah, so we would just do that. That
Yep.
way everybody would know if we release this publicly, which
Hmm.
that's something we'll probably do. We're not going to go through everything, but here we're gonna kind of say, hey, all right, give us something, right? Like, is there a decision that we're gonna want to make? We can do various things here too. I don't know. I mean, you can kind of go through it if you want. You could say, hey, we
Why
know
don't you
the
just pick an easy one like another technical like a
okay.
some sort of momentum change or something that'll indicate that things are starting to turn around to the
Yep.
positive side.
Yeah, if you want to add anything in there, you can do candles. You can do, hey, I want the VIX at a certain level and, whatever else, put call ratio, so you can add all that in. Let's just do this for very simple aspects. So you can add as many of these nodes as you want.
Yeah.
Um, or you can create like an advanced script as well. So that way you can do multiples in there. For this, we're just going to keep it simple, just do some kind of technical. And this, we might not even keep this and release this publicly. We're just doing something. We'll backtest some data and look at that. Um, most of these names, all the moving averages, they're below all of them, right? So let's just
Yeah.
use something simple. You know, uh,
Is there a way to
you,
get a faster one than the general moving average? Is there a way to get like some crossover of like a just to kind of be a little bit
yeah,
fast or beat the crowd?
let's see if we can find something here. Let's see. We have trend indicators. I mean, maybe we could use momentum rising over 3 periods
Okay.
or 5 periods, whatever we want to use. So this is when momentum, there's an indicator out there that is a momentum, indicator.
Yep.
This is saying, okay, price has risen now over 3 days. Maybe, we got some movement kind of going in here. We have a limited period of time that we're going to be using this for. Likely at this point in time, the MACD either hasn't really turned yet or is flat. And
It'll take
it's
too
it's
much time for it
it
to
might take too much time exactly. So like
yeah.
it might be the safer bet, right? Because it would turn, it would probably cross over. You might get a pullback. You might get, it might be a little bit safer. But we're looking for a turn now, and then we're just going to let the controls run it, right? So
That's
like,
right.
let's just say 3 day, 3 period.
That's fine.
Um,
Use that for
yep,
now.
and we'll just do last candle. That way it gets in right away, and just hit save, right? So then you got there. You can always label it as well, and we can just call it whatever, Momo. Call it that. I mean,
Yeah.
doesn't have to be anything special, whatever you want to call it. You can make fun names up. And then you could just say buy the call here, right? So very easy decision or open position. Come in, clicked on the wrong spot there, of course, but
Call. Okay.
yep, at least it's pretty easy. Come out all the way. This you have to scroll a little bit if you want leaps.
Yeah. How about this one a little bit faster? I just want 2 months.
2 months? That
Yeah,
works.
I'm looking for if this is gonna work, it's gonna work fast.
So 60 days maybe? All
Yeah, let's try that.
right. All right.
The
Give it a
least
little
amount
bit.
with a lot of juice. That's what I'm
Yeah.
looking for.
We'll just say this 60 DTE, so days to expiration.
And use a
Uh,
delta of like 35 or something like that.
so like last time, yeah, yeah.
Yeah.
Just see if we can get a trade off in here. Just one each, maybe. All
Yeah, that's all.
right. So here, like we were talking about before, middle of, and let's just do mid ask.
Okay.
Some of these names, they'll have a little bit wider bid asks on them.
Sure.
Apple Oven's pretty expensive, so it's probably into it. Um, a lot of these names are getting a lot cheaper though, right? Like,
Yeah,
uh,
exactly.
CrowdStrike's probably still
They cut in
expensive.
half.
But like Oracle, Palantir, ServiceNow, they're all getting a lot cheaper than what they used to trade at. Especially some of them, like ServiceNow's had a split, so that's even a lot cheaper. Max trade count, max number of positions that can be created by this. Let's do 10. So if you want, you can get into all of them. Open interest, let's just set it to 0 for right now, just in case it selects like a weekly contract. These are all
Okay.
fairly liquid names, right? Like none of them
Yep.
are that illiquid, so we don't want to have a constraint on it. So then we would just set up, we could use a technical indication if you wanted to, or we can just simply say, make a decision and say close this. We're gonna see if we can get the momentum. We're just gonna use basic standard, let convexity try to run or close out on your stops. I think that's probably an easy way to go since we did that on
Yep.
last one. This isn't something that there's, when you have these huge sell-offs, right? Like the technicals, at some point, they don't matter as much, right? Like there's just fundamentals don't matter either. So
Exactly.
it's really just kind of
Nothing
sentiment.
matters. Wow,
Exactly. So
supply and demand.
so maybe we just Maybe this one will get a little more aggressive since it's
Yeah, I like it.
yep,
150 and then maybe a loss of 50. 3 to
50, yeah.
1.
Yep, 3 to 1. Great risk reward ratio for anybody watching. That's something we try to usually base a lot of our models on is the risk reward ratio so that we can be profitable. How it works out, even if you're not right, uh, over 50% of the time. That's that you will really want to be able to position yourself that way. So here's the easy thing. Again, we can do forced closure on this one. We might want to do that. Maybe do it 5 days before.
Yep.
Get out ahead of expiration week so that we don't lose any profits that we might have. Again, I'm going to expect a lot of these are either going to hit profits or you're going to get stopped out. The chances I think you make it to the forced close are probably low, but you just hit save. And then you would come in here and you would just, build it out, right? Like this one, you could say it's a little more speculative or aggressive. You could still, we could come in here and name all this.
Okay.
Um, Top 10 IGV
IGV. Yeah, there you go. Perfect.
60 DT or something, right? Like, or you can
Okay.
name it anything. You can give it a fun name. And we're going to change this. We're just telling you what the length of time is. We don't know if this is going to be the technical indicator we're going to use.
Gotcha.
But
Yeah, yeah, yeah. I understand. This is good. This is just give people an idea of what they can do.
exactly.
Simple idea, trying to get long IGV and then
Yep.
playing around with the tool to just create your own strategy.
Exactly. So here we'll do this. We'll go through this kind of quick. You guys can kind of do this. And this one's now a swing versus really anything else. Um, and you can type in here. We'll type in more of a description. IGV top 10 for now. Um,
Yep.
And then with this, you're going to want to increase your budget, obviously. You got Microsoft in there, you got these bigger names in there. So, uh, I mean, maybe 25,000. I don't know. I'd have to look at like what the total portfolio could be.
Yeah,
Here,
probably about 25,000 is needed for that.
yeah. Here, I mean, you're still going to want to open this up a little bit. I mean, maybe 75%. This
Yeah.
is again speculative. So, and then I don't know. I mean, just as a precaution, we're just gonna go with 7%. I'll look at this now and kind of see like what would
Yeah.
be the biggest position. We'll alter this, but this is kind of how we're looking at it.
Okay.
And then we can leave dynamic sizing on if you want, or we can turn it off and just buy one. So if you have a bigger portfolio, you might want to do that, or a bigger allocation that you want to something like this, and then it would just
Right.
dynamically size it for you. For this, we're going to turn it off just in case. But otherwise, yes, prevent duplicate trades in this one because we're not buying the same one every time here.
Okay.
We want different ones. And then max simultaneous trades, we're going to want to open that up to 10 so that you could get the full lot if it works out.
Okay.
And then custom tags. So you just kind of,
So if I just wanted just to, on that one, if I just
yep,
wanted, say, okay, I have the 10, but maybe I don't want all 10. I want just the top four, the first four that could start moving, then I can just do that, right? Is that what this is saying here?
exactly. So if you just want the first four, and we'll just do that for now.
Yeah.
Like I said, this will
I have
change.
10. I put
And
10 in there. This is
yep,
the universe, but I really just want the first ones that are starting to move.
exactly. And a lot of people will do that. Those are the ones that are rebounding first, right? So like
Right.
maybe they want the first four, the first three, the first five. So you can just put that in there and you just say, hey, here's the universe. I don't know what's going to move first, but I'd
Right.
like to be in those ones because they're going to likely be the leaders.
Exactly. Okay.
All right. So down here you have custom tags. You can go in. There's all different things like AI semiconductors. You can kind of go in, add selected ones. Honestly, what you probably call this is a mean reversion trade, right?
Okay.
Maybe bullish momentum because you're capturing in the
Yeah.
short term. It's pretty simple. It is beginner friendly, I would call it. And then, you can add selected ones too if you wanted. So if you ever want, you can just kind of come down, type in anything for suggestions. And you can put it on for calls.
Nice.
As you can see here, you got sell calls. So you get it. And then what people can do is if this goes public, they can search for those tags and it'll pull up all of the strategies that are out there that have these tags or the agents.
Gotcha.
So we'll just go down and we'll just call this new. We'll put some version in here at some point, but we'll just do this quick. That way we can get through it. And then you would just hit save. So
Perfect.
I'm sure if you've watched any of our other videos, you've seen this before, but just for anybody new out there, that way you can kind of see how it works.
Awesome. So that would be once you're going to do a back test on it, which is the good thing about for everyone watching, the good thing about Option Circle is that you can build your strategy and then back test it and see how it's performed. Is that correct?
Yep,
Yeah, I
exactly.
think that's pretty amazing. So build something, create something, build it, back test it, and then put it on a virtual, on a virtual, put on a virtual strategy just to watch a trade for the next month and see how it reacts.
Yep, so you can do that. And then over here, we got our new back test. So you literally can go to your agent, hit the back test button, and start running one of those. We should probably do a video on this
Yeah,
so that
yeah,
we can show them. But you can see here we have the back test history. You can just quickly pop one up, walk
perfect.
through it here. So it's not that hard. Run a full back test, and then boom, you will have it. So some back tests take longer than others, but it's using actual options data. And then we're going to be increasing that time length that we can do it on. Right now, I think we can only go up to 1 year. So it does take some time a little bit, but you can kind of go in there and play with that if you have, I believe, a premium account. And I think you might get some allocated on a smaller account. And then just one quick thing to show everybody. So, like, say you wanted to, like, say, like, we were looking at the IGV, right? And we're like, well, you
Yep.
could buy between, we thought like the optimal area is like 75 to like, I think it was 89 or something, right? Like it's a wide
Okay.
range, but this is where we could bottom. So like say, right now we don't have the feature built, but we're going to be putting it in there. So, as features continue to come on, we'll be able to put like things like ranges and things like that. But for now, all you would want to do is like say, hey, set a chart alert. All of a sudden you're like, okay, it's above 89. Hit stop. You would just literally hit that. You would make sure you don't close all trades immediately. You just do as per agent design. So say you only got three of those IGVs on, but it's
Yep.
either below 75 or it's above 89. Come in here, hit that, hit save, and you're done.
Gotcha.
That agent's not going to run anymore until you tell it to. So it's a
Gotcha.
very easy way to do it. So that way you can kind of control things as well. So I know a lot of people, it's hard to give up control of trading, but the beauty of it is then it just does it for you, and
Yeah.
you don't, the data matters, and you're not sitting there making emotional decisions.
This is great. I appreciate it. I look forward to seeing what you build. I'm gonna take a look at it and we'll go from there.
All right. Wonderful,
All
Felix.
right. Thanks, Matthew.
Have a good one.
Be good. Bye.